Hello guys, in today's video I'm going to be sharing with you a very important content, and I'm going to be answering questions regarding the divergence series of videos I've been uploading for a couple of days now, and that's about the best time frame to trade divergences, and then the issues bordering on how to time your entry and exit. Sometimes you combine a whole lot of things in to form a kind of logical premise for you to execute or take your trading decisions. Okay, and someone said, one of the questions, someone said that sometimes the reversal is not spontaneous whenever you spot a regular divergence. Okay, whenever you spot such signal, well, I would like to say that that is exactly how price moves in the financial market. I always emphasize that you don't restrict the movement of price. Okay, and I've always told you guys that the algorithm that drives forex these days is highly sophisticated, to the point that the design is such that mimics or reacts to the sentiments of the crowd. Of course, you are the crowd, the traders, the retail traders, the hedge funds, and the rest. Okay, the algorithm reacts to the sentiments of traders, and sometimes price could move spontaneously, okay, in the direction that it's driven, and sometimes it tosses. Okay, that tossing kicks people out of the market, and sometimes it still moves towards the intended direction, or sometimes it reverses. So you really need to equip yourself with the right knowledge. You need to equip yourself with the right understanding of how the financial market works. Okay, now what we do is that we predict with high probability, not necessarily restricting the movement of price by telling you that it's going to be like this 100%. No. We analyze, we predict with high probability. So that's exactly how it works, and I'm going to be answering some questions regarding the divergences, and of course you are going to learn a whole lot from it. So this is CN Honor on the screen, and you are watching CN Great Counsels and Forex Trade. And if you are new on this channel, I'd like you to quickly hit that subscribe button down below, subscribe to this channel, and turn on your notification bell so that whenever I upload a new video, you'll be notified and you get to watch it, because we've started. And if you're an old subscriber, I welcome you back to my channel once again, and I'd like you to give this video a thumbs up. Please do well to share our contents, do well to leave your decent comments in the comment section, and give us suggestions on the kind of videos you'd like us to make. Okay, don't forget that we're building this channel together. Okay, now let's get into the content proper. First off, you can actually trade divergences, okay, from any time frame, but don't get that twisted, because I'm gonna say a whole lot of other things, okay, that are related to that. Now, it depends on your trading style. Okay, it depends on your trading style and the type of divergence, and of course your equity. Okay, however, for regular divergences, note what I'm about to say. For regular divergences, which signals price reversals, it's in fact better traded on higher time frames for some obvious reasons, which I'm going to share with you now. Number one, signals on higher time frames are more reliable if they are valid. Now, you discover that this was the analysis we made the other day on crash 500. Okay, and this signal we are getting it from daily time frame, and of course I uploaded the video, was it yesterday or so, and look at what is playing now. The whole of yesterday, it crashed down. I told you guys to be careful if you're trading ticks. Look at it, the whole of yesterday, the whole of day before yesterday, in fact for days now, it's been crashing down, because I told you that it has hit the upper line, the upper trend line of the falling wage, and so it's gonna crash down and I made some predictions. It has crashed down like for days now to this point. Now if you go to lower time frame, you understand that it's been a very big market. It's been a very big market and crashing down still. Look at it, it's been crashing down still, okay, from that day. About 3 days now it's been crashing down, though the tick might still go up, but it will crash down. It might go bullish a while but crash down until we get a kind of signal that is not going to continue crashing again. But then we will have to reanalyze. Sometimes you analyze, you reanalyze the market, and then you are good to go. So depending on your time frame, it's better, and your trading style of course is better traded. That's talking about regular divergence now. It's better traded on higher time frames, and I've told you one of the reasons is that signals on higher time frames are more reliable, and whenever they are valid, they are more reliable. And this is because the market or price doesn't move as fast as it does on lower time frame. Secondly, it is easier to define trends and identify market structures from higher time frame. It is pretty much easier to define trends and then identify market structures from higher time frame. And then thirdly, since it signals price reversal, that's talking about regular divergences this time, okay, since it signals price reversal, which if plays out well would be for long term, then it gives you a better time to decide on what to do as a trader. Okay, I don't know if this point is clear, but identifying whatever, not just regular divergences, every other pattern or whatever you're trading, if it is identified on higher time frames, because of the movement of prices, it gives you ample time to take the necessary decision. Because like I said earlier, the movement of price is not as swift and as fast as you see it on lower time frame. Okay, but you have to take note that any signal from higher time frame you are taking, you definitely need to have the equity that would support your trade, of course, and you don't use big lot size in case the market goes against you for a while, and since it's gonna be for a long term. Okay, now talking about how to determine your entry and your exit. Well, sometimes you combine 1, 2 or more confirmations or indicators to do that. Okay, now things such as candlestick patterns, confluences, break of market structure, signals of market or price exhaustions, and the rest. Okay, you can use all of that. In fact, there are many other entry and exit techniques which this video may not really cover today, but I know I've made several videos relating to entry techniques, though not fully on entry techniques, but I have made videos on how to identify trends like a pro, and what to do whenever you make such identifications. I've also made videos on confluence and what to do, and lots of other useful videos on what to do whenever this or that happens. Okay, so you can check them out in the video section of my channel and the playlists, okay, to search out for some of those videos for your updates and for your equipment in this new year. Okay, so that's what I just wanted to answer these questions and to keep you updated. Please take note of everything I've just said, and if you are new on this channel, I'd still like you to subscribe to my channel and turn on your notification. Meanwhile, many thanks for watching this video, guys, and I just want to take time to make some of these pattern videos that are has to do with certain ways you can trade apart from indicator based strategies. Of course, when I'm done with some of the content I'm supposed to upload to lay a better foundation for the new year, I'll start uploading tons and tons of indicator based strategies for your profitability. So the video is getting long already, and I'd like to thank you once again for watching till this end, and please do leave your decent comment in the comment section of this video, and also like and share this content so that we'll get to other traders. This is CN Great Counsels signing out for today. Bye.